very good. Okay. So we will continue from where we left the other day. I think 1 day gap. Okay. So anyhow, you are remaining so enthusiastic. So I should live up to your expectations, because sometimes, whatever we discuss in the 11th hour, last minutes, that will be remembered. That will help you. Yes, I have this is my experience. Because I am associated with CAIB almost more than 10 years, 10 or 12 years continuously. I am getting myself involved in CAIB. Okay, friends. So with this introduction, today we will go to our session. Okay. Okay, friends. So I remember we stopped at this point. What is operating profit? Operating profit ratio, how to calculate? Okay. Operating profit is slightly different from net profit. Okay. So here interest earning, interest paid, and taxes will be added back. So that is meant by operating profit. All expenses except tax, except interest, that is operating profits. So the operating profit ratio we have just calculated. Now we will move forward. So ratio analysis.
Sir, one question. Sir, in previous class, some formula are used, but sir, how to remember those formula? Actually, some problem are facing, sir.
Yes, boss. That is the issue. Some for example, debt equity ratio, current ratio, these are common ratios, but some ratios like DSCR, now I am going to add further. This, what you can do, if you are not in touch with, sometimes you may not be able to do credit assessment in work situations. So here, doing again and again, and you have to find some ways to remember. Okay, it all depends on your individual to individual. Some people remember by doing again and again, practicing. Okay, so especially theory questions you can learn fast, but the practical questions involving some mathematical formulas, the formulas normally you cannot by heart, you cannot do. By practice alone you can retain in your memory. Okay, friends, I will tell you simple ways to remember in the course of time. Okay, so today, yes, question number 10, 20 over. Now we are going to, some theoretical question also. Then we will move over to practical. Okay, today we are going up to working capital assessment. Be alert. We are going to apply method 1, method 2, turnover method. How we are going to assess working capital under the traditional method. So all these things we are going to have, very live examples. Okay. So now question number 21, the ratio of fixed assets to current assets will be higher in the case of service units, trading units, manufacturing companies, none of these. So the answer has come normally, manufacturing companies, because they'll have more investment in plant and machinery, land and building, furniture and fitting. But the service units and trading units, they may not have that much investment in plant and machinery. So that is why the ratio of fixed assets to current assets will be higher in the case of manufacturing company. It's a simple question, but anyhow, the question is asked, don't miss it, because sometimes as a banker you have to analyze, you have to interpret which unit will have more investment. Normally manufacturing unit will have more investments, because you have to invest heavily on land and building, furniture and fitting, plant and machinery, but that much heavy investment not needed for running a service unit and a trading unit. Got it? Okay. So it's a simple question. I am going. Okay, friends. Yes. Number 22. In case of, you see, this is another twister question. Sometimes they will ask. Okay. So these are all theory question. In case, look at the question. The equity capital exceeds as compared to debentures and preference shares. Debentures and preference shares are debt capital. There are two sources of raising capital: owned funds, borrowed funds. Owned funds are also called as equity capital, and the borrowed funds are also called debt capital, and the debt instruments are normally debentures, bonds. Government of India will issue bonds, and private companies, some rated companies, not all companies cannot issue debentures. The rated companies, they can issue, debentures. That is, debenture is a medium term instrument, and the public sector units normally they will issue bonds. Okay, these are all debt instruments. You see the question: capital, equity capital exceeds, that is, owned funds are more compared to debentures and preference share, then the company will be called as what? Whether it's a low geared company, high geared company, whether it's a reverse geared company, there is no reverse gear. But anyhow, to confuse you, they will give all this, none of this. So the answer is A, because they have got high level of capital and debt funds are low, so it is called as a low levered company. You know what is a low levered company or low geared company? You know what is high levered company mean? More loans, more outside loan, and less of capital. Some people intelligently they will run the unit by raising more loans and using less capital from their side. Why they are doing like that? The business collapses, their funds are only little, others' money will be more. So they will be running the unit very carelessly because his money is not more, no. Others' money only is using. So as a banker, you have to avoid such companies. That is why debt equity ratio, this ratio analysis is being done, and the benchmark ratios also, I think you have all learned what is the acceptable current ratio and all. Now we will go further. 22, 23, acid test ratio establish the relationship between what and what. This already you are familiar, is the relationship between quick assets to quick liability. Again, answer is C. Quick assets. What do you mean by quick assets? The assets that will become cash within a short notice. It will not take 1 year. Quick, short notice. Reasonably, if you sell that assets, you will get back the cash. So that is quick assets. Quick liability mean, you know very well, quickly you have to pay back. Okay, not more than 10 months, 9 months, quickly, because electricity bill is a quick liability. Salary is a quick liability. They have to pay salary. And the tax is a quick liability. They cannot just like that delay. Okay. So like that, sometimes bonus also. They have already declared bonus. So March is over. So April, May they have to give bonus, cash bonus to their workmen or employees. Otherwise the company will, the image of the company will be damaged. So all these are quick liabilities. Okay. But our bank loan is always excluded. Yes, it's also called quick ratio or acid test ratio. We have discussed. Now you see some twister question they will ask. A good current ratio accompanied by these questions are asked. These similar questions. A good current ratio maybe 1.6 current ratio, 1.5, 1.7, but accompanied by a low quick ratio. The current ratio very good, 1.6, but quick ratio 1.1 or less than 1 or 1.12. So like that, what does it indicate? Well, the answer has come. High level of investment in fixed assets, no. Disproportionately high investment in inventory, okay, correct, because inventory is excluded in a quick ratio. So here normally inventory is included. So current ratio means all will be included. So this may be one of the reasons. High level of inventory and low investment in inventory. No, it is not low. High investment in inventory, because inventory they have invested so many months of inventory mean current ratio will be better, but quick ratio will be down. That is how you have to intelligently they will set the question. Low investment in inventory. Okay, I should have made it animated, so the answer has come. High level of book debts. No, book debt is near to cash. Low investment, so the correct answer is B. Okay, correct answer is B. These are all theory question. This question, okay, I should have animated. Okay. Now, okay. Now, when a company, you have to give the answer. Okay. A, I have not shown. It will come afterwards. When a company reduces the credit period for buyers from 4 months to 3 months, the debtors turnover will, what will happen to the debtors turnover? Now, I think you need not require a calculator.
Decrease.
Decrease, okay, we'll analyze. First, credit period for buyer. Oh, correct. From 4 months earlier they were giving. So the turnover will be when they were giving 4 months credit. What will be the turnover? Can anyone tell? What will be the turnover? 4 months credit. Then turnover will be? Tell me. 4 months. What is the turnover? One of you can tell. 4 months they were allowing credit. A credit period for buyers. 4 months mean turnover will be, debtors turnover will be how many?
3 times. 3 times.
Three. Correct. 3. 4 months mean 3. Now it is reduced to 3. Now, earlier they had given 4 months credit. Now the 4 months credit is now reduced to 3 months credit. Now the turnover will be, what will be the turnover now? Debtors turnover will be,
4.
when it is 3 months, 4.
4.
Okay. So the answer will be, debtors turnover will increase or decrease. It will increase or decrease. Is an intelligent question.
From 3 to 4.
Great. Abba. Oh, madam has given the bullet answer. So when the
Sir, once
credit
more.
period, all of others are able to understand? Yes, boss?
How, sir? Will increase from 3 to
Friends, no, earlier, you just look at the question. Earlier they were selling on 4 months credit. That means the 4 months book debts were outstanding. So the turnover will be 12 divided by 4 months mean how many times it will be rotated? 4, 4, 4. So in a year it will be 3 times. So the debtors turnover will be 3 here, and they are now reducing the credit. Earlier they were giving 4 months. Now while selling itself they are telling no 4 months. You have to pay within 3 months. Otherwise we will not sell. Otherwise we will add more overdue interest. So they are giving a clear message to the buyer to settle within, not take more, not to go up to 4 months, settle within 3 months. Now they are strict, we assume. So in that scenario, when the book debt is 3 months, the turnover will be 4. So the earlier turnover was 3. Now the new turnover is 4. So the answer will be, it will increase from 3 to 4. That's a question. You understand? Simple question. Book debts are, yes. So answer is A. Okay, friends? Similar way they will ask. Now you see the question. Simple question. But sometimes people miss it. Stock turnover ratio to a unit is 5 and the total sales achieved was 240 lakhs. Then what will be the closing position of stock? Sometimes they will give opening stock also. Then they will ask closing stock. Normally remember, opening stock plus closing stock divided by 2 is equal to average stock. If they give opening stock, you have to find out the average stock. If they don't give opening stock, only closing stock, you see the straight formula. What is the straight formula? Stock turnover ratio of in a company is 5. That means stock is rotated 5 times versus sales. So total sales 240. Then what will be the closing position of stock? Very simple question. Okay. So can anyone tell with 48? Correct. 240 divided by 5. 240 is the sale. 5 is the turnover. So 240 divided by 5 is 48. Yes, 48. Okay, very good. That is a simple question also. Sometimes simple, but the way they ask will be a little different. Okay, friends, be comfortable. They are asking only simple questions only. Questions will not be too complicated because you have to reply within, you have to find out the answer within 1 minute. Time is a constraint. It is not a classroom question, but the way it will be indirect. The way they ask will add up. They will add some build up so that you will normally be reluctant or you will be confused to select the correct answer. So now I am giving some arithmetical calculation. Now we
Sir,
are going
one
to
doubt,
working.
sir.
Yes, madam.
Sir, you told about that average stock.
Yes, yes.
No, sir. How we will find in this question, sir, if average stock is
In this question, madam, average stock arises. The stock turnover can be calculated using closing stock, or sometimes if they are given the opening stock, then only you have to use average stock. The real formula is sales divided by average stock. That is the turnover. But in so many questions, the average stock, how we can find out? They have to give opening stock, then they have to give the closing stock, then only you can find out the average stock. If they don't give opening stock, you can take closing stock as the only stock. Just sales divided by closing stock will become the turnover. Understood, madam? If they give, what is opening
Yes.
stock? Additional information they will give. Opening stock will not be given just like that. It will be given as a, it will not appear in the balance sheet. Closing stock will not appear in the, opening stock will not appear in the balance sheet, madam. It will appear, what is opening stock? The stock, the closing stock of last year will become the opening stock of current year. So opening stock will not appear. Opening stock will appear only in the balance sheet. P&L account. It will not appear in the balance sheet. Balance sheet which will appear, closing stock only will appear. Okay, you understood? So actually
Yes.
stock means, yes, average stock. If they have given opening stock, just divide by 2, that's all. Opening stock plus closing stock, if they are given additional information, then average stock will be divided by 2. Then turnover ratio you calculate using average stock. Otherwise, closing stock only you can calculate. Okay, friends? It all depends on how they are asking the question. Now we are coming to, slowly we are inching towards working capital calculation. You see the question, a simple question, but it's a preparatory for you to go towards working capital. You see the unit question. The annual purchases are 2,472 lakhs of raw material. Okay, annual purchases. They are annually, every year, 2,472 lakhs they are buying. And the unit has to keep minimum 2 months stock. The unit has to keep minimum 2 months stock. Then the question is, what is the working capital needed? They will ask, or what is the investment in stock needed? The unit has to keep minimum 2 months stock. You understood? The annual purchases are 2,472. Now they need 2 months of stock minimum. 2 months of stock is okay to run the unit successfully. Now, how much working capital is needed, or how much investment in stock? Investment in stock means working capital only for stock. What is working capital? The other day we discussed. Money needed to be invested in activity related or need based current assets of a unit. It may be service unit, it may be trading unit, it may be industrial unit, it may be small, micro, small, medium enterprises unit. Any unit needs some, yes, raw material, okay, work in process, finished goods, book debts. Okay, so they need money to be invested in all this. So that is called working capital. Now, how to do this question? Annual purchases are 2,472.
412.
You divide by 12. Simple. Divide by 12. Why you are dividing by 12? Per month requirement. Then how many months of stock they want? 2 months. 2 all you multiply. So 412 is the answer. Only 2 steps you will get it. Understood or not? How many of you understood? The annual purchases are this much, and 2 months of stock is required. How much money is needed? How much working capital needed? That's all. 20 seconds you can get the answer. 15 seconds you can. This much simple they will not give. This I am taking you to final working capital formula. Understood or not? Okay. Next question. Okay. Annual need, 2 months stock mean you divide by 12, multiply by 2. Very easy. Now it will change. Same formula will not be there. So depending on the question, you have to adjust the formula. His question is, sir, how to remember all this formula? It will come by practice. Practice. Yes. Now 28, you see, here different. The annual purchases are same. 2,472 lakhs, and the average stock of raw material is 480 lakhs. Average stock, average they are holding 480 average, 460, 480 in and around average throughout the year, 480 lakhs. This average is different. On an average basis, their level of holding 480 lakhs. Now find out RM holding level. Holding level means RM cycle. How many months of raw material? Earlier, the question was the working capital needed to keep 2 months of stock. Now, the stock of raw material 480. Now they are asking this 480 amounts to how many months? Holding level means how many months? Now the question will be little, the formula will be little different. Same 480 you put at the top.
130.
480 we are putting at the top. This is the outstanding raw material at any point of time. Divided by 2472. What is 2472? That is 2,472 lakh. That is 24 crore 72 lakh. That is the annual consumption. And multiply by 12. Why you are multiply by 12? You will get the answer in months. Suppose you multiply by 365, you will get the answer in number of days. How many days of raw material they are holding? Now, how many days of raw material they are holding? In this given example, 2.33 months. 2.33 months. I think all of you have got a calculator. I will ask one of you to calculate because you need to practice how to use the calculator effectively in the exam hall. Okay, I will give you a lot of calculations. Okay. So how many of you understood how to calculate the number of holding cycle? I think one of you, please don't remain in mute mode. Whenever I am telling you, please, you have to cooperate. Don't remain in unmute mode. Please mute when you ask questions. Okay. Yes. 28. Now question number 29. Cost of work in process. What is the work in process? Work in process means semi-finished goods. If the annual cost of production, always remember, work in process will be linked to the other day we discussed. Okay, raw material. Again, I will repeat. In working capital calculation, raw material will be linked to annual purchases. Those who have missed, please note down. Raw materials will be linked to annual purchases. That is outstanding raw materials or raw material consumed will be linked to annual purchases. Second one, work in process, semi-finished goods will be linked to cost of production. That is popularly called COP, cost of production. The third is the finished goods will be linked to, yes, it will be linked to what? Cost of sales, that is COS. Okay. The fourth one, book debts will be linked to the total sales. The four things you have to by heart when you are doing practicals in the exam. Okay. Repeat. I think all of you are familiar now. Raw material will be linked to annual purchases. I think one of you is still in unmute mode. Okay. Please mute.
Sir, again pardon, sir. I am noting, sir. Again pardon, sir. Just noting. Again tell me, sir. Noting, sir. Just.
Okay. Friends, okay. While noting down, you can just press your mute button. Okay. So I will tell you. You listen. You be attentive. Raw material, how much they have consumed, or raw material, how much they are holding. Always raw material linked to annual purchases. One line you wrote, note down. Raw materials will be raw material consumed or raw materials outstanding will be linked to annual purchases. You are going to find out how many months of raw material utilized. Okay. Raw materials will be always linked to purchases. Second one, work in process. Work in process is also called WIP, popularly called, or semi-finished goods is linked to cost of production. Cost of production will be little more than raw material, because raw material, more factory expenses and all, it will become cost of production. Then the third is finished goods, the value of finished goods. How much finished goods they are holding, that is linked to cost of sales. Because finished goods, the valuation of finished goods arises, some more value you have to add. Cost of production plus selling expenses, administrative expenses, all other advertisement expenses, everything, packing, transporting expenses, that becomes cost of sales. The finally, book debts. How many book debts are outstanding? How many months of book debts outstanding? How to find out? Book debts will be always linked to sales. Never forget. Okay. So now question number 29. If the annual cost of production is 1860, that is COP, and the what find out the WC required, working capital required. If working capital required means how much money you have to invest. How much money you have to invest. If the unit has WIP cycle 15 days. 15 days means what? Half month. You take that way. 15 months is nothing bad. You can do it in days also. But days mean it will take time. But months mean it you can use it by. So to 1860 is okay. Now they are going under, because it is in days, we will adopt 365 days pattern. Every year has got 365. So the 1816 is for the full year of 365 days. Now for 15 days, how much COP? That's all. So for 15 days, it will be 1860 divided by 365 multiplied by 15. That is 7643. 76 lakhs 43 will be the funds needed to maintain the funds involved, funds needed to maintain the work in process cycle. Is a cycle, because it will not become cash, you know. So work in process means what? Raw materials slowly getting converted to finished goods. There will be a time gap. So for that, the unit has to invest. The unit has to incur some expenses to get the finished goods. And then the question is, how much money is needed only for WIP? Only for WIP, how much money is needed? So this is how. So the cost of production divided by, yes, number of days 365, you will get for 1 day. Then you multiply with 15 days, you will get, this is the WC needed only for semi-finished goods. Now we will go further. Understood? Simple. Divide and multiply. Okay, now 30. Now can anyone try now? One of you can try. The annual cost of sales. Yes, madam.
Sir, work in process will be linked to cost of purchases or cost of production?
Cost of production, madam. Now cost of purchases. There is no cost of purchases, madam. Purchases mean that is annual purchases. Cost of production, cost of sales, that is the terminology, correct word. Cost of purchases, that word is not purchases, that's all. Annual purchase, raw material will be linked to annual purchases, and working process will be linked to.
Why not the working capital required of the unit?
Oh, yeah. Who is that? Okay. Yes. So the work in process will be linked to cost of production, madam. The finished goods will be linked to cost of sales. Here only two cost of production, cost of sales. And purchases always will be used as purchases. Same way, the book debts will be linked to sales, annual sales. Okay. So there no cost will be involved, because these the work in process and finished goods involves a process. It involves process. Okay, raw material, it undergoes a process, it becomes semi-finished goods, is undergo further process, it becomes finished goods, then finished goods when sold on credit term become receivable, when sold on cash term become cash. Okay, understood? So this is the working capital cycle.
Yes,
now the question is, now all of you have to try. If you have got calculator or even mobile calculator also, the annual cost of sales, popularly called COS. The annual cost of sales for the full year is 48 crore 24 lakhs. 4,824 lakhs. That is 48 crore 24 lakhs. Find out the WC required or funds required to, if the unit holds finished goods for a period of 30 days. The finished goods. Which one, boss?
396.49.
Very good. We will see. Okay, very good. All right, boss. Great. Appa, salute. So fast, boss. Wonderful. So 4824 is for the full year, divided by 365, because here 30 days. If they have given in 1 month, you divide by 12, or 2 months if they have given, you can use months. Because they have given 30 days, very good, correct, sir has correctly applied. So 4824 is the annual cost of sale divided by 365, okay, into 30. So 4824 divided by 365 into 30, 396.50 rounded. Very good, clap. Very good, sir. 30 clap. Okay, understood. This is simple. This simple why I am giving to prepare you for the final exercise of working capital assessment. It may be a 5-mark question. Now 31. 31, sometimes the question they are asking is before method, LIFO method. Don't, you have to make familiar. Sometimes you should not feel, sir, you have missed that. The valuation of inventory, okay, normally our units are valuing under, normally they will value under before. What is before? Note down the expansion. First in, first out. Before, there are two ways of using inventory and valuing inventory. What is using inventory? Before mean first in, first out. The oldest stock will be used first. Then the new stock in the same chronological order. You can note down. Before mean the stock will be utilized by the manufacturing unit in a chronological order. What does it mean? The oldest stock will be used first in production. The before is actually ideal. But some American, so many Japanese companies are using LIFO method. LIFO method means the last in, first out. Whatever stock they are acquiring, latest stock, they will first use in the production. So that is called LIFO method. Sometimes they will ask question, how to value under before method, how to value under LIFO method. Just 2 questions I have given. Now we note down the question. Company A, company name is A. They purchased 1200 items. Simple question you can understand. To understand one basic question. They are purchasing 1200 items of raw material in some item at 80 per unit during January. Understood? Okay. They buy 1200 items during January. The rate is 80. The same item they are buying, the same raw material, maybe some circuit board or something, a blade, something needed for raw material or some semi-finished goods needed for the production. The 1 unit last January 80 rupees, but the same goods in the February it has gone high. So 80 earlier, now 100. Now during February they are getting same 800, same goods 800 units at 100 per unit. Now the rate per unit has gone high. Market value is 100. Earlier it was acquired at 80. Now in February they have got 800. Now the total stock is 2000 item. 1000 item, 800 item. And this is different cost. This is different cost. You see the tamasha. Now in March they are starting production. March they are starting production. How many units are used in production? 1000 units are used. There are 2000 units are there. 2000 units are raw materials are there. And in March they are using 1000. Now the question they will ask is, what will be the value of closing stock under before?
96,000.
Appa, you are so fast, boss. What will be the value of closing stock under LIFO? Alright, great. Now,
80,000.
what is the okay, oh, very good, very good. Now calculation is before method. First we will do before method. So the stock in January you have to calculate 80 into 1000 to 12,000 item. 12,000 item they are, sorry, 1200 item they are purchased at 80. So the January stock value is 96,000. Very good. Now the February stock is 800 item into 100, 80,000. So the total stock as at February will be 96 plus 80, 176. This is how you have to work out. You should keep a separate working sheet and you have to go on calculating like this. So the total stock at the end of February end 176. Now March they are starting production. How many units they are using? They are using 1000 item they are using. This is a before method. So the 1000 item where it will come from? The first one, first in, first out. So the 1000 items will be from January stock or February stock? Tell me, boss.
January stock, sir.
January stock or February stock? Huh?
January stock. January.
January stock. Why? Because it's a before method. So January stock 1000. What is the price for January stock? 80 only. So 1000 they are using. That used value out to minus. So 1000 into 80, 80,000. So the closing stock under before method will be 96. The closing stock under before method will be 96. The closing as at March end. March they have not purchased anything. January they purchased something. February they purchased something. March they used something out of the under before method. Now you have to value under before method. Understood? Now
Sir,
same.
How,
Yes,
the closing stock under before 96,000, how are getting 1000 unit used, then 200 units remaining, sir?
That is remaining. Now that is why the total stock is including already 200 units are included here, boss. So 16 plus 18, 96. The 200 units are already we are minusing only used units, you know. So already accounting is done for remaining units. Boss, this is for 1200 unit. Now 1000 unit. So the 200 unit is here, 16,000 is here. That is why you got 96,000. So under before method, you have to first adjust. You have to first adjust the oldest stock first. So under 96, under before method, the closing stock will be 96,000 value. Now you watch the before method. Under before
80,000.
method, little different.
Sir, not clear.
Very
Sir.
good.
80,000.
Yes, yes. Yeah.
Not clear, sir. Not clear.
More? Not clear.
96,000, how are you getting actually multiplying or subtracting? What you are doing, sir?
96,000
No,
minus 80,000.
No,
remaining
176,000 is the total stock, and the March stock you are minusing. Automatically you will get the closing stock na boss.
Okay,
This
you are
is
just
the
minusing
total
over.
stock. Minusing automatically it will be adjusted. Don't worry. You have to.
Minusing from
this-
1,76,000, sir.
Huh?
You are doing minus from 1,76,000.
Yes, this is the total stock, you know. The stock was secured in January and February. This was the closing stock as per the method. Now under before method, they are using stock mean they will use the first stock will be from January item. January 1,200 they already got. So 1,000 item mean that entire stock of January is still 200 items are left over. That if you minus, automatically you will get the value at before. These are the steps, boss. Okay, now you watch the steps for LIFO. LIFO mean stock purchase in same 176 same. This will not change. The January stock 96, February stock 80. So the total stock 176. Now in March they are using 1,000, but this is not before method. Remember, this is LIFO method. LIFO method means what? Last stock 800 they will use first. 800 they use. Again 200 they want, you know. That 800 they are using. So you have to minus at what rate? That 800 item will be at 1,000, 100 rupees you have to minus. So 800 into 100 into 80,000 you minus from 176. Again